Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment. That's going to be Landon Swan, the co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. Good to be here.
Good to see you again. We're talking gambling. We're talking PENN Entertainment, not PENN Gaming anymore. But everybody seems to focus a lot on the barstool aspects of PENN Entertainment here, Landon. But it seems like the competition in this space is really robust at this point to try to get, more members, get you on their loyalty programs. PENN Gaming's kind of been consolidating lately. What kind of data do you see into this report?
Yeah, there's going to be high competition in an industry like this. I mean, this is one of the best industries to be in. High margins. I mean, you're basically trading money for more money with customers. I mean, everything's a winner for the house. So there's going to be fierce competition for these customers. And I actually really like their strategy of using Barstool Sports. They completed their acquisition of the rest of the company in February. And when we look at just Barstool Sports, just mentions overall, you can see why. I mean, it is a nice uptrending slope up and to the right. Looks very strong. I mean, this is why they were acquired. They're able to get more and more people talking about them, using them. And when you have an audience that is captive and very engaged in what you're creating, and you say, hey, this is where you should go bet, that's where the audience is going to go bet. So I think that there's a reason why investors are giving this so many looks, because if you think about just normal competition across sports books or casinos or gambling properties in general, it's tough to differentiate yourselves. And so this is one way that they're able to do it. They're also putting a lot more money into, just enhancing their properties, investing in technology, and just trying to become more appealing to the younger demographic, to retain them and to capture new ones. So I think that strategy is going to pay off for them long term. In fact, they're the only company among the three big ones, FanDuel, DraftKings, and PENN, that actually posted a profit in the last quarter of 2022. So I think a lot of that does have to do with Barstool Sports, Barstool Media. So I think there's a good reason why they're looking at that. And when you go across and you look at the happiness, this is actually, this kind of just plays right into my point. Customers are more happy with these brands because it's entertainment, right? Like when you bet on sports, it's fun because you're betting on your favorite team and you get 2 or 3 hours of entertainment. Maybe you win, maybe you lose, and you're paying a little juice in the process. But when you do it with a personality that's, you feel like you have a camaraderie with these guys, then it's just even more fun. So I think that Barstool plays into this happiness, but also just, again, the technology that they're delivering is just better. So I think that's why we're seeing the happiest. Now, that's the positive side. When you look at sort of the negative side, one of the things that we're seeing is that the overall purchase intent mentions for PENN are actually down, while trends like visiting a casino are up 8% year over year. Online sports betting is up 15% year over year. So PENN here in the green, the 90-day moving average of purchase intent, this is people basically saying they're going to one of the casinos or they're betting on Barstool Sports or one of those. They had a nice run up through about this time last year, and then it started to decline. The stock has been flat ever since. And actually, when you look at the stock, it's pretty much where it was pre-COVID. It had a really big run, over triple, almost quadruple, but it's back to where it was like in January of 2020. So a tough run for the last year or so on this stock. And I think a lot of it has to do with the fact that even though they've got the happier customers and they've got this fantastic content creation, they're actually falling behind when it comes to getting people to bet more, getting people to play more. So I think they are attracting the audience, but maybe they're not just attracting the as active of an audience. So that could be a problem for them in the near term. I think long term, this is the one of the three to win on. But in the near term, we're a little bit more neutral, even though a lot of what I said earlier was pretty rosy. The data itself is not showing that they're following up with the trends that should be supporting them.
Landon, is there a cyclical aspect to these casinos and these betting shops? Because I understand after the Super Bowl, after March Madness and the Masters, that there's probably a drop-off in overall betting. You can bet on hockey and basketball, but it's probably not the same as football and March Madness. Now, the other things I read, and your data backs us up a little bit, Tom mentioned that there's pretty incredible competition with these casinos. But is Penn National, are they starting to pull away from the other competitors because their numbers look really strong? Or is this the whole sector getting a little bigger? Because it looks like the growth in Penn is fairly impressive, Landon.
Yeah, yes, I do think there's cyclicality for sure. I mean, summer sports are not as fun to bet on. They're not as bet on. Baseball definitely is on the lower end of that. I think it probably peaks around Super Bowl, March Madness, in that area. That's going to be the highest point. And you can kind of see it here. There is a little bit of a cyclical nature with the winter being the higher bars. And we're actually sitting at about plus 15% right now for sports betting. So you always have to compare year over year. So plus 15% is saying plus 15% over this time last year, which is obviously good. So that kind of leads me to the second part is, yes, I think the entire pie is growing. I think that they're growing. And again, everything that we have as far as the consumer level of happiness and acquisition looks very strong, but activity isn't as strong. So I think the pie is growing and they're growing as well, but I'm not sure that their slice of the pie is growing. It depends on kind of how you look at it. Like, when we look at happiness, and just total people talking about their acquisition channels, it's very, very strong data. But we look at people talking about actually placing bets and spending money, as you will, in these properties or online. It's actually less. It's growing less than some of their competition. So it's a little bit of a mixed bag here, which I know, it's always more fun to be hammering this one side of the table, but we're kind of playing both, and the earnings score actually comes in the middle there at a little bit of a neutral score.
So neutral going into these results. You mentioned happiness. I think that's the big key here, Landon, when you look at the comparisons, because we talked about the competitive landscape for these companies, but it seems like there's just one group of people that are betting is the key to continue to market themselves, spend on advertising for, there's one piece of pie of gamblers, right? And it doesn't seem like there's a lot of opportunities outside of that space. Is that untrue according to your data?
No, I think you're right. I think it's kind of like it's been an old problem, I think, in the industry, is to try to invent new gamblers, and it's really tough. I mean, it's the same demographic. It's basically men, from anywhere from 20 to 60, maybe probably a little older than that, but it's men, and I think that's the key. But I think one of their strategies is going after that younger demographic, and generally speaking, younger demographics have less money to play with. I think that's probably what we're seeing when it comes to the less bets being made. But as those new customers age and they become more successful and they start upping their bets, instead of betting $10 or betting 100 or 1,000 per game, then all of a sudden I think this brand is going to take off. So long term, I really like this company and their acquisition strategy, and they're going after the top of the funnel, the younger demographic, which will eventually get there. They just have to get them and then hold them as they become more profitable. And one thing that we haven't talked about, if the economy does start to slide a little bit more, this is one of the best industries or best sectors to be in. It's extremely defensive. Sin stocks do really well during recessions. So I really like all the companies in this sector. This is probably my favorite. We've got a negative 18 going into this earnings report. Not quite enough to place a bet on this one tomorrow morning. But if they do sell off based on some of this, lower purchase intent versus their peers, I might actually think about going in long on the long term if they do sell off, because long term, I love their strategy.
All right, good stuff. Hey, there's plenty of sports to bet on during the summer. You got AFL going on right now. You've got Premier League soccer. There's plenty to bet on, and they're all listed on there, and you can bet during the games also. All right, Landon, appreciate all the data. Have a good day.
Thanks. Take care.
All right, that's Landon Swan.